Hi everyone, I'm Chad Shoop, the editor of Automatic Profits Alert, and today I want to talk about what I've been talking about, and that's the possibility of a stock market crash. Now, we just went through a 10% correction or so, and I continue to preach that that is a great time to use it as a reality check on your portfolio and your overall exposure. If you saw that 10% dip and you had to panic and sell stocks, or you had to panic and go to cash, or you're just panicking in general, then maybe you're overinvested in the market, because the market's seen some great returns over the last few years. And I know it's enticing to kind of jump in and be overinvested in a market like that because you want to continue to benefit as much as possible. But there are going to be corrections. There is going to eventually be a crash. So it's great to use a correction like this as a time to reevaluate your exposure in the markets. And I wanted to talk today about a way to kind of reevaluate your exposure, which instead of going to cash, I wanted to offer an alternative today, and that's a sector ETF, which is the consumer staples sector. So this ETF with the ticker XLP tends to be a great environment, a great spot to place your money, even if there is a stock market crash coming. So we went back and we looked at the .com bust that was in the early 2000s, and if you were in this consumer staples sector, the XLP, your returns would have actually jumped 40%, and that's compared to an overall market with the S&P 500 falling over 40%. So that's a complete 180-degree difference between what the market did and what the consumer staples sector did during that decline. Now, if you fast forward to the 2008 housing bust and the Great Recession that caused, during that time, the consumer staples ETF fell about 27%. But when you compare it to the S&P 500 again, that whole average of the S&P 500 fell 54%. So you're still outperforming the market by a large margin, and you're better off by owning this consumer staples ETF than you are by staying invested in the broad market. Now, but it also gives you another benefit compared to going to cash. So if you go to cash, then you can miss out. I mean, you're still probably taking a 10% drop or something like we already did, and then you would go to cash. But at that point, you can no longer, your money's not going to go up and it's not going to go down anymore either, but you can't benefit if you're wrong about the market crash coming. So, and that happens a lot. People expect the market crash to come and it doesn't come for years. So if you're wrong about the timing of the stock market crash and you go to cash, then you're going to watch the market dip. It's just going to be a correction. It's going to turn around and it's going to continue to go higher. Then at that point, you have to make a decision on when to jump back in. And that's a difficult choice. And a lot of times if the market's still volatile, then you're going to be in and out. So an alternative to go into cash is going into this consumer staples sector ETF. Because when the market still gets whipsawed and goes all around, you're still going to be in it for that ride. And you know that if the market continues to go down, then you're going to see a cushioned return compared to the overall market. You're not going to do as bad as the overall market per se, based on the last two crashes that we've seen. And that's a great way to look at it. That's a great concept to have, mindset, when you go into the market. That way, you don't have to go to cash. You can go to the consumer staples sector ETF, just own that, and then continue to ride it. And then if it turns higher, then you're still benefiting some from that. And then at whatever point you wanted to go in and diversify it from there, you could, just to benefit, because the consumer staples sector is not going to rally as much as something like the technology sector. So you could go in and kind of reallocate that once we're completely in the clear from a stock market crash. But for now, just use that as an alternative to go into cash. Go to the consumer staples sector ETF. That's ticker XLP. And if you don't know what the consumer staples sector is, it's a basket. The ETF owns a basket of consumer staple stocks, which are companies like Walmart, Colgate, Coca-Cola. These are companies that provide items that, regardless of if the economy's booming or if the economy's in a recession, we still have to go to the store, we still have to buy toothpaste, we're still buying groceries, we still have to feed our families. So these companies tend to see steady, stable operations. They're called the consumer staples sector. And it's a great diversification tool that you can use if you're worried about a stock market crash. Well, that's all for my video today. If you liked it, be sure to subscribe to our page, continue following us, and until next time, I'm Chad Shoop with Automatic Profits Alert.